What's the difference between a trader and an investor? Okay, I've done a setup here on a typical retail broker platform. And this happens to be Google, and each one of these bars represents 5 minutes. The high point, as you will know, is the highest price it's been in that 5 minutes, and the low point is the lowest it's been, okay? A trader is looking at entering, this was, look, 4th of January. So they're looking at doing a trade within a day. You sometimes used to be called day traders back in, 20 odd years ago, right? And their ambition is they need to work out when to sell or to buy. And all trading, all investing is when to buy, when to sell. And of course, as you know, they're trying to get out. Now, they've got a couple of major problems. How do they know when to buy or sell? How do they know when to exit? In other words, if they've sold first, how to buy it back cheaper. Buy low, sell high, or sell high, buy low. It's all the same thing. The reason they're doing it is because they're hoping in those short periods of time they make money to compensate them for their time. What's an investor doing instead? Let's look at the monthly chart. Now, if you look at the monthly chart, you see with an investor, they've got a slightly easier task, but they're probably going to make less money. And you can do the maths on that because that was done in December 2019. They're going to be holding this probably for 12 months. Yes, they got in at, and it's again, Google 1271, and they're holding it. Now, they're going to make less of a return, but they're going to have less time expended. The trader makes more of a return because he's going to do a lot more of these trades within a year. The investor is only probably going to do 1 or 2 investments in a year per stock. Okay, so that's the trade-off between buying and selling. Follow me, subscribe, all the rest of it if you want to learn more.